What's up, babes? Welcome back to the channel. Been getting a lot of comments from viewers lately talking about how humbling this year's stock market has been, especially after 2020 basically being easy mode for a lot of us. And you guys know I've been doing a lot of videos lately on riskier stock plays like Desktop Metal or Skills, who've been getting freaking pantsed in recent months. So I'm going to share with you guys my top 10 holdings as per your request, as well as a bunch of other honorable mentions, including my biggest loser. Now, it's been a good half year or so since I did a video like this, and so I wanted to share kind of where things are at, how things are moving around, and there will be some holdings in here that those of you who are newer to my channel might be like, dude, you're a YouTube finance guy, why do you hold this? You're stupid, kind of thing. And I'll explain those when I get to them, so give me some patience. But first, I got some news updates for you guys. Number one, still not a millionaire. And secondly, I've been on and off Twitter with my various businesses over the years, but I finally started a proper Twitter account that pairs well with this channel. So go ahead and check it out at Entrepreneur. I will, of course, share whatever, news tidbits I find that are fascinating, and I'll probably also be sharing some of my own moves as well. So you can check it out at Twitter, Entrepreneur. If you're new here, welcome to the show. My name's Trey McKee, and here at Benevolent Investors, we aim to make fat gains through the stock market and crypto, and then turn around and invest them in our families, communities, a little bit of ourselves, and probably somewhere along the line, pick up a Cybertruck or two. Here we have the new edition of the inappropriately zoomed in side angle. Let me know what you guys think about it. First off, my number 10 holding, the one and only, the single reason for many of my subscribers' portfolios being completely decimated in recent months, Desktop Metal. I've been very interested in this company for a long time, and I see the potential for it to go either completely bonkers and take over the planet in like 10 years, or for it to die in a dumpster fire fueled by endless acquisitions and share dilution. It's a bit of a risky play, but I'm still very comfortable to continue investing in them. And the share price is making moves directly inverse to the number of acquisitions they're making, but like many small and rapidly growing new tech companies, it's all in the execution. If DM, under the leadership of double unicorn Rick Fulop, can actually execute and organize all of these acquisitions as well as their 600 plus patents, we could see DM being one of those industry-changing multi-baggers in the coming years. Desktop Metal now makes up 3.91% of my top 10. Next, in position number 9, an index fund that almost got my license to be a finance YouTuber removed. It's always done well for me. It's Charles Schwab's SWTSX, or Total Stock Market Index Fund. As the slide says, it's up 21% year to date and generally mirrors the S&P 500, which is fabulous. If you're looking for a low-fee index fund you can auto-invest in, which I've been doing for years, which is why it's this big in my portfolio, I do recommend this one and Schwab in general. With a gross expense ratio of only 0.03% and no loads or fees, I've really enjoyed this one. If you're interested in joining Schwab, there's an affiliate, basically the opposite of an affiliate link down in the description below. I get nothing, but you get money. And if you're a baller and you put in $500,000, you can get a lot of money, I think. Though I've been doing okay for myself in the last few years with a number of handpicked stocks, I like to have these broad market kind of anchors in the portfolio still. And in general, all of these holdings are just kinds of funds that grow slowly over the years along with the S&P, which I appreciate. And the reason this has become so large in my portfolio is just because I have it set to auto invest and have for many, many years. And so it just kind of just keeps growing, and it's easy and it's hands-free. SWTSX makes up 3.95% of my top 10. Next on my list is Ethereum. In my last portfolio, I separated crypto and stocks, so it was kind of hard to understand how everything fit together in the big picture, but in this video, I'm going to put them all together so you can get a better idea of like how crypto-y I am. I know a lot of you guys don't super love crypto and aren't very heavy into it, but I want to put this in here to show you guys how it's benefited my portfolio, I guess. Again, Wild West, super risky and all that stuff. Ethereum has just been something that I add to here and there over the last number of years, and in general, crypto is like one of those things where it's like you don't do fundamental analysis on it over the weekend and come up with an investing thesis. It's just kind of like people are shilling whatever they believe in, whatever they want to grow on the internet, especially lately with like all these dog ones, Shiba Inu and all this stuff. But Ethereum stands out from the crowd because it does actually have use cases and has been the long-standing, basically number 2 crypto behind Bitcoin, and now stands at basically all-time highs of $4,100, as you can see on the chart here. Ethereum makes up 4.19% of my top 10 holdings. My next largest holding is, shockingly and confusingly for many people, I think, and regrettably for me, ARCG, or as we say in the hood here in downtown Japan, ARCGizzle. Another contender for the let's ban Trey from being a finance YouTuber complaints. ARCG is one of these funds that's like really contentious, and to be honest, I didn't do that much. I broke one of my rules. I didn't do that much research into it before I got into it, and I probably shouldn't have gotten into it this hard, this quickly, if at all. That being said, I believe in the future of it, and I know it'll pay off at some point, but it's going to be a very, very long time. And like I've said many times, this is a space I'm comfortable to just completely outsource to ARC. Though I am known to be a bit of a science and entomology and biology boy, I'm completely happy to just outsource all of my genome anything to ARC Invest. I don't know how to run like a pharmacy or genomics or these kinds of businesses. I don't know how it works. And I read the reports and it's kind of like, maybe that's going to be approved by the government. Maybe that's going to be accepted by people and become a money-making thing in the future. I don't know. So like I say here at the bottom, if you invest in the future of genomic medicine now, hopefully you'll be able to break even in something like 8 years or something like that. No, but in all seriousness, it could be one of these things that just is like so parabolic in the coming 10 or 20 years. And it's just kind of like, just leave it there, forget about it. ARCG makes up 4.56% of my top 10, and boy, am I down thousands and thousands and thousands of yen. Next on the list, and you were probably wondering when this would appear, is everybody's favorite overhated and overlooked stock, Nokia. Nokia has done pretty well this year by basically doubling from its lows to its highs. I've been a fan of this stock because I see that the amount of hate for it is still, I think, completely unjustified, making it one of those tremendous value plays. Under new leadership that's making moves to slim down the company and double down on their strongest offerings, Nokia is, like, literally speaking, a very, very important company for the way the world runs. And if you're using the internet, and we all use the internet every single day, Nokia is probably involved at some point along the line, be it magical underwater internet cables that connect continents, to powering your favorite cell phone provider's infrastructure. Nokia is truly a massive international player that's going nowhere soon, and on the contrary, I think will be due for even more share price appreciation coming up here. I'm going to be sharing more about some of the option moves I've been making as well with Nokia, but I'm looking forward to a strong earnings call coming up soon too. Nokia currently makes up 5.79% of my top 10 holdings. Next on the list, another relic of investing styles past, where I just passively put money in, we have Charles Schwab's US Dividend Equity Fund. This is one of those ETFs that I've just auto-invested in every month for many, many years, and as a result, the numbers just grow larger and larger and provided, solid growth, solid kind of, backbone amongst all the other speculative crazy crap I have in my portfolio. So over the years, I'm up something like 30% overall. Some of you are probably wondering why I even care about dividends at all, but one of the things I've been learning in recent years as I start to get more active in my trading is that the larger kind of slow and steady holdings like this as a part of the backbone of my portfolio really helps to mellow out the drama while providing kind of mindless auto growth. It's like, doesn't really go down that much. Speaking of dividends, I did set up a random portfolio of dividend stocks a few years ago and then promptly forgot about it. And I'm putting together a video about that portfolio for you guys, and the findings are pretty interesting. Schwab's SCHD has a 0.06% net expense ratio and has been putting out a 3.01% distribution yield for the trailing 12 months. And its top 5 holdings are Home Depot, Merck, Texas Instruments, Broadcom, and Pepsi, which aren't going anywhere and are also just, kind of paying little dividends. And that's what you do. You just auto invest and it grows. That being said, this is one of those holdings where I wonder if I were to start a brand new portfolio, like a public portfolio for you guys or something like that, with a big chunk of cash, would I put this in it? I don't know, and as I've been putting together this video and thinking over the last kind of few weeks, I'm like, dude, my investing styles, my investing strategies have really been evolving over the last couple of years, especially since I started this channel. But on big home runs I've made, like some of the ones I'll be mentioning in a minute here, my larger holdings, I'm kind of thinking more like, dude, I need to be transitioning away from this kind of general market, easy, like small gains kind of thing, and really be hitting hard growth and value plays like AMD and stuff like that. SCHD makes up 6.8% of my top 10 and continues to grow automatically because it just gets dividends and buys more of them all the time, which is neat. But going on to my next one, AMD. AMD's probably been the poster child of kind of my new investing style, and it was probably my highest conviction, like, dude, I gotta get more of this, like, now, it has to go up, dude, style of investing. And I think I want to be doing more of this kind of thing in the coming years. An excellent company that was for some reason or another beaten down to the lower 70s, when in reality it should have stayed at 100 or 120 or more, depending on who you talk to. Friends and subscribers brought it to my attention, so I dove in and did a big flurry of videos to try and really understand the company and the industry as well. While I've known and enjoyed AMD's products over the years, that research also allowed me to see that it was undervalued and should be making big moves soon, which it has done. I'm up nearly 50% on the stock, including options, and have really enjoyed its moves. Learning about the industry has also caused me to look more into the upcoming Xilinx acquisition, as well as competitors in the same space or overlapping spaces, tangential spaces, like Nvidia, Intel, Micron, and a few others I've invested in too. I still hold AMD, but I'm wondering what the future holds as we're starting to see Intel showing their teeth a little bit. Apple's making some more aggressive moves. AMD's also been doing really well in the last couple of weeks. I don't think we're due for another 40-50% gain in share price in like 3 to 5 months like we've already seen. I think the big gains are already past. AMD currently makes up 11.54% of my top 10. Number 3 of my top 10 is Palantir. Check it out. Now that I finally started to make some money on this stock, it starts to get me wondered if I've gone too hard at it. And while we see potential for this company to quite literally take over the world and become absolutely crucial in the backbone of operations of pretty much most or all Western powers, it's clear that the leadership of the company knows there's an endless supply of buy the dip, diamond hands, auto invest every time I get my paycheck type investors. And so we're basically always seeing share dilution and massive stock-based compensation figures associated with their rapid growth. So I'm not expecting this to take off anytime soon. It's one of those plays where it's like, these guys are really crucial to the way the world works, and governments improving their systems and fighting terrorism and rolling out vaccines and all that kind of thing. And so I think they'll be multiplying manyfold in the coming years. I don't have hopes of it making big returns like AMD did, but if the execution can continue in a really strong way, and we'll see that, and we'll see how that's going in their upcoming earnings report. We did see an $8-ish billion Army contract recently. That's $8 billion over something like 7 years. And they didn't get all of it. They just got most of it. So when you read into the fine print, it's like they're growing and it's good. And they have really good technology, and that's good. And their team is growing, hence all of the crazy stock-based compensation stuff. But I think it's really going to be key to see how they can tune into the commercial sector of the market. A lot of people are worried that they're too concentrated on government stuff only, but I'm not. But I think once commercial segment becomes a larger part of their revenue streams, then we're going to start to see much, much bigger multiplicative growth. Palantir makes up 14.95% of my top 10. Next on the list, we have number 2, Bitcoin. I think it needs no introduction. Bitcoin has been a big kind of buy and hold in my portfolio over the years. And if you were brave enough to get into it, even just a couple of years ago at $6,000-ish, $6,000, then you've 10x your money. I've been doing that along the way and enjoying it. And it's just kind of one of those things I'm just kind of putting a little bit of money here and there, very, very long term. I don't think of it as like, oh my gosh, I'm going to get into more and 500% my money overnight or something like that. And I'm getting a little bit more comfortable doing some swing trading with like a small portion of my holdings. Like I'll just keep a big chunk and then I'll just play with kind of like 5 or 10 or 20% as I'm seeing those moves, expecting it to go up or expecting it to come back down. As inflation is growing and increasing government intervention on currencies around the world, we're also seeing transaction costs plummet on the Bitcoin network, as well as more network upgrades and network participation blossoming all over the world. And I'm really excited to see how this changes in the coming generations. So I look forward to even more gains going forward. I'm not going to be one of those guys who's like, oh my gosh, Bitcoin to $500,000 by next March, like some people are on the internet. But I have high hopes for it over the very long term, and let's just leave it at that. By the way, if you'd like to get started with crypto investing, BlockFi can be a good place to start with buying some cryptos and earning interest on holding them as well. So check out the affiliate link down below. Bitcoin makes up 20.7% of my top 10 holdings. And next, thanks to massive moves in the last few days, number one is Tesla. You guys probably all know this already. Tesla's returned to making really big moves after fantastic earnings, and once again proven to the world that they don't play on the same field as every other automaker, nor, any other energy company either, really. And they've also proven that they're capable of really, really big growth. And, their factory production rolling out around the world at high speed, powered by multi-month waiting lists and actual output that's putting many legacy automakers to shame in the midst of a supply chain crunch. Tesla's once again back in the spotlight. I've been in Tesla for years now, and I'm up thousands of percent, and I'm still excited for the future of the stock. I'll continue to hold the bulk of my position for the long term, though I do see a bit of swing trading opportunities, and I'll take advantage of that with a small bit of my holdings. Tesla now makes up 23.87% of my top 10 holdings. I also wanted to take a moment to highlight some honorable mentions for you guys as well. Number one is massive losers. You're probably expecting this one, but the biggest loser in my portfolio is Skills by far. While we've been seeing it make some actually really decisive moves on the business side, not on the stock price side, it's one of those stocks that I'm excited about for the long term. If they can execute on it, it's going to be big. And interestingly, in this week, Cathie Wood and ARC have added another 10% to their position, which I wasn't expecting. But Skills is down like 45% for me, and it makes up about 3% of my portfolio overall. Next on the honorable mentions, we have Good Gains Bro, and that would be Nokia options that I've been playing around with. I think I might be onto something with this, and been doing pretty well on them, and I'm up more than 100% on some of my plays. You guys know I've been going hard at Nokia for a long time, and I went even harder when it was in the $3 and $4 range. I hit up some $3 and $4 leaps, which are starting to pay off splendidly. I know if I didn't play with leaps, they would be paying off even harder, but I'm up 100%, almost 100% on some of them. And I know you guys have also been asking me to share a little bit more about options and stuff like that. And part of the reason, like I mentioned earlier, I wanted to make this video is to kind of lay out for you guys how my own evolution is happening in terms of how I invest, what's working, what's not working, what's a better way to invest for me in my current situation. And I'm going to be sharing more about that in the coming videos, kind of talking about and no, I'm not trying to become a day trader, market timing, guy. Like, that doesn't work. And I've proven that to myself many times over already. But I am starting to figure out how to implement options more effectively and actually at really low risk. And I'm also figuring out how to use them for monthly or weekly income just to supplement the bank account a little bit as well. Let me know if you're interested in learning more about that down in the comments section. Next, we have honorable mention for recent gains, and it's a stock I don't think I've ever mentioned to you guys. It's the next-gen energy management company, Enphase. I haven't done a proper deep dive video into Enphase yet, but I'm intrigued by all they have to offer. I've been buying in with tidbits here and there, and I'm up about 16% in the last few weeks, which is pretty cute, I think. So let me know in the comments section if you'd like to learn more about Enphase, or if I should put together a video or anything like that. Finally, for the honorable mentions, I wanted to share some recent additions. If you've been following the channel, you already know about my moves in Micron and Intel. And in a recent video, I also shared about how Square could be a solid multi-bagger that's most likely undervalued at the moment as well. I know cash is a bit of a mixed bag at the moment, and many are fearing the potential for inflation to further devalue cash at a really rapid pace. I'm aware of that, but I'm also aware of the potential of some overall market volatility as indexes and crypto ease into all-time highs as well. So having cash available at times like this has done me really well in the past, and so my cash position is quite large right now too. Looking forward to hearing your thoughts down below. I love you guys. Stay generous. Talk to you soon. Peace out.